Well, greetings and salutations, test takers. This is the Series 7 Guru coming to you from my studio here in fabulous Las Vegas with another explication request. We'll help you with any request you have from any test prep vendor, just easier if it's Kaplan. The best free supplement to your paid study materials is my YouTube channel, but if you don't already have a Kaplan QBank, it is the best paid supplement to your existing study materials. For that commercial, Kaplan allows me to give you a free look on Kaplan content, and you can get a Series 7 Kaplan QBank for $58.50 with my Guru 10 discount code at checkout. All right, let's get busy on this. It's a QID 1468211. An investor with no other positions buys 2 June 45 calls at 3. So I highly recommend you do things on a per share basis. Again, lots of ways to do things. It's a buffet. Take what you like, leave what you don't. So I have a choice to buy 200 shares at 45. That's what that contract specification is. And I paid 3 points for that. So there's the 3. When I'm all done, then I'm just going to multiply by however many shares. In this case, 2 contracts. So I'm going to multiply by 200, assuming, what goes down here. All right. He exercises the calls. So you can exercise your calls anytime you'd like. And so if I exercise my calls, that means I'm paying $45 for the stock. Right? So that's important. When you exercise a call contract, what that means is I'm exercising my choice to buy the stock at 45. So I'm out 3 points for the call contract. I'm out 45 for the stock. By the way, some people memorize break evens. The break even here is 48. 48 is the same dollars out as dollars in. Looks like I got a little bit of a problem because my break even's 48 and the stock's at 47.25. It says I sell the stock at 47.25. So again, I'm just tracking the money. I always say, fire up the T, fire up the T. He immediately sells the stock in the market. So I exercise my calls. I sold the stock. So ultimately, it looks like I got a problem here because I got 48 out and only 47.25 in. So I lost 75 cents per share and 75 cents on 200 shares, because remember, each contract governs 100 shares. So that means I bought 200 shares at 45 and sold 200 shares at 47.25. By the way, I think your T would be a mess if you put 600 in here and 9,000 in here. Just a mess. I suggest you do things on a per share basis. Okay, so we lost 75 cents a share on 200 shares. 200 times 75 is a $150 loss. That is indeed the answer to the question. So hope you found that helpful. And again, this is a basic option position, kind of mucked up a little bit with the phraseology, but just by way of review, let's just go roll it back here. Fire up the T. An investor with no other position buys 2 DWQ, June 45 calls at 3. You can either put 6 in there or 600 or 300, whatever you do. I like to do things on a point per share basis, so I'm going to put 3 there. I exercise the call. You should know contract specifications. You should know that when you're long a call and you exercise, you paid 45 for the stock. So I'm out of pocket 48 here. Some people use minus signs. So I'm out 3 points for the option. I'm out 45 for the stock. The stock is trading at 47.25, and I immediately sell the stock. And again, that's going to be a problem because I have more money out than in. I've got 48 out per share, 47.25 in per share. I'm losing 75 cents on 200 shares. So that's a $150 loss. Okay, well, remember, inch by inch, your Series 7 is a cinch, yard by yard, your Series 7 is hard, and I'll see you for the next explication request. I backed up here, so I got quite a few coming down the pipe here.